Morning, everyone. Welcome to our Demo Day Wednesday. I'd like to start by apologising. You won't be able to see me for this. I don't know if that's a good or a bad thing, but you won't be able to see me in this demonstration. I'm having some real issues with my camera. It seems like it is on. It's got a light flashing, but GoToWebinar's telling me the camera's not actually physically on display. So my apologies. I always think it looks a bit off if you can't see the presenter in these webinars. So my apologies to start this webinar without being able to see the presenter. But yes, welcome to our Demo Day Wednesday. We do one of these every Wednesday, as the name suggests, where we go through a different part of the ecosystem and a different feature set, trying to help you guys extract the most amount of value out of these subscriptions of yours as possible. Today, we're going to be taking advantage of all of FE fundinfo's integrations. We have been very busy of late, certainly over the last year, designing and building a number of really, really slick integrations that, again, if you harness them and leverage them, you'll be able to extract far more value out of your analytics, cash calc, and advisor asset subscriptions with us. So we're going to focus on some of the core ones we've built recently and give you a bit of a sneak peek as well in terms of what we're looking to develop moving forward. By way of an introduction, I'm David Scholes, Director of Wealth Sales on the advisor side at FE fundinfo. I've been here for quite a few years now, and my team are responsible for advocating and promoting the use of our advisor software to advisors predominantly in the UK, but increasingly beyond our shores as well. Housekeeping, webinar is probably going to last about 45 minutes, so we've got it booked in for. If you've got any questions, feel free to ask as many as you like. There, for those of you that haven't used GoToWebinar before, there's usually a little question box similar to any kind of chat facility. There should be a little question option within or on your side. Click on that, add as many questions as you like, and although I won't clearly be able to answer that as I go through the webinar, I'll make sure we've got plenty of time at the end. It's all anonymous as well, so don't worry, no stupid questions, because no one's going to know it's you that's asking them, so don't worry about that. But I should have the systems loaded up as well in the background, so I should be able to answer the questions with words and pictures and content rather than just explaining to you. Cool, I think that's the introductions done, so let's dive straight into this. So before we get into the integrations, just wanted to take a bit of a step back and kind of give you the logic as to why we're building these integrations and what we've been doing over the last few years. As many of you has probably seen, we've been on a bit of a buying spree of late. We've acquired a number of businesses, and we now have analytics, cash calc, and advisor asset. And the challenge for us over the last year or two is to try and integrate these applications as much as possible, again, to make your life as easy as possible when you're using them, and to create this kind of connected workflow and this kind of consistency when you're running your advisor operations. There's so many different things you have to do in the advisor world, and each different thing you do don't necessarily overlap with the other. So you have to do ATRQ, you have to do a cash flow, you have to do fund research and MPS analysis, you've got to do platform due diligence, you've got to do client reporting, you've got to do pension switching. I could go on. There's all of these different skill sets that you need the software application to do, but they're all very different to one another. And this is why we've develop these integrations, and that's why you've acquired analytics, cash calc, and advisor asset, to try and create for you one ecosystem that does all of those jobs very, very well. Again, this idea of jack of all trades and master of all of them. But we're very conscious, of course, that ecosystem of ours needs to integrate to the outside world as well. So you've got your client data and some portfolio data and a platform and a back office. We should be able to push and pull that data. So again, we're going to be discussing that today. And the journey we're on at the moment is to try and integrate these solutions as much as possible, which again, we're going to be focusing on heavily today, and creating this kind of application layer, this kind of primary layer where you've got all of the core bits of kit that you need to do your job. But over time, we're trying to start building out a secondary layer for you. So actually in time, you possibly won't be interacting with that primary layer, you'll be interacting with the secondary layer. And we call that Nexus. So the idea of Nexus, and this is being built as I speak, so you'll start seeing a lot more of this over the coming weeks and months. The idea with Nexus is you can log into one system, and it's a bit like an app store. On the left-hand side, you've got all the different applications that it can do, your analytics, your cash calc, your MPS directory. But importantly, you should be leveraging AI. So we've got Nexus AI. And at the moment, we're building things like meeting notes, the idea that when you're in a meeting with a client, a bot will be there taking notes for you and summarizing that at the end and popping that into the fact find and getting that into your back office, etc. But as I said, this is a secondary layer, secondary application. The idea being that in time, this won't happen immediately, but this is where we want to push it, is the idea that you should be able to log into Nexus and simply ask it what you want. Okay, well, I know I can log into Cash Calc and Analytics and Advisor Asset to do these different things, but actually I should just be able to ask a bot. It will know how to do that for me. Go and get me the 5-year performance of the Bruin Dolphin balanced portfolio. Go and give me the latest cash flow research I've done with my client, Mrs. Smith. And it should just go and find that for me and deliver it on that secondary application rather than me always having to interact with that primary application layer. So this is what we're looking to build out, but this kind of sets the scene nicely, hopefully, with what we're talking about today, because at the moment we're kind of building both of those layers. We need to make sure that primary layer is fully integrated, which is what we're going to be focusing on today, and that obviously then gives us the headroom to start delivering that secondary layer application layer on top. So what are these integrations? So if you think about, again, our ecosystem, we've got analytics, and again, as I mentioned earlier, they do very different things to one another. So you've got analytics that brings to the table the data, the fund data, the MPS data, the reporting, the risk profiling. But then you've got Cash Calc that delivers completely different skill sets, cash flow, client portal, financial planning calculators. And now we've got Advisor Asset that provides, again, a completely different side of the ecosystem, platform due diligence, charge comparisons, pension switching, etc. So as I said, the integrations we're going to be focusing on today are how are we bringing all of this together? How are we creating these connected workflows to make it easier for you to harness these systems and basically get more than the sum of their parts? Okay, I'm using analytics, I'm using Cash Calc. How do I get more from these subscriptions if they connect with one another? So we've isolated 5 core integrations we'll be taking you through today. We're going to be looking at how we've integrated that ATRQ workflow. So you've got an ATRQ in Cash Calc, you've got an ATRQ in the portal, you've got an ATRQ in analytics, but they each do separate things. They've all each got different kind of trade-offs. Well, if you connect all of them, you get a perfect solution, one would argue. So that's what we've done. We've kind of created one seamless workflow through all of them that they kind of loop back, starting at the portal, ending on the portal. So I'll explain how that works. Then we're going to be talking about Advisor Asset. So this is a big acquisition of ours last year. Again, that brings to the table the platform due diligence and the charge comparisons. So we had to do 2 levels of integration. First of all, integrate that entire application into analytics. So it's now part of an analytics subscription. That's one job done. And the second job was, okay, well, how do you port portfolios across? If I'm in Advisor Asset and I'm doing a charge comparison, it's going to be on a proposed portfolio that lives in analytics. How do I get that portfolio data from one side of the ecosystem to the other? So we'll explain how that works. We're also going to be talking about MPS data, because it's not, when we talk about integrations, it's not just software integrations, it's also data integrations as well. So that's one of our huge strengths at FE Fundinfo. We're also a data house. We happen to be a data house and a tech house. There's not really many entities in the industry that have this advantage. So the data part of our business is out there busy collecting all the critical bits of data you need, not just on PS, which we'll be focusing on, but all the SFDR labels and all of the new ET templates and all of the MiFID costs and charges. Any new regulation that comes in that means an asset manager has to start generating more data, we're the ones hoovering it all up. And then that gets surfaced neatly without any intermediary into your analytics and or Advisor Asset accounts. So we'll be talking about the kind of the data integrations and what that looks like, particularly in the world of MPS. Then it never ceases to amaze me how many advisors use our kit and our ecosystems without realizing that they equally tether to the outside world. Again, that back office and platforms. So we'll cover off a few of those integrations to again make sure you appreciate that if you do have a back office, a platform, these are the different ways in which you can use them side by side with what we're building here with Nexus. And the fifth one, personally most excited about, we've just released this literally within the last week. It's basically a brand new integration that a lot of people have requested, an integration between analytics and Cash Calc that allows you to push portfolio data from analytics into Cash Calc to drive that cash flow logic and the Monte Carlo logic as well. So we're covering that off as well. Right, number one, ATRQs. So as I've just mentioned in that brief intro, you've got all these different parts of our ecosystem that can do a different part of the ATRQ job for you. How are we joining all of that up? so you can have that kind of seamless end-to-end workflow. Well, everything always starts off in the portal. Again, it doesn't have to. Again, this very much depends on your business, so you can adjust and amend this however you like. But the workflow we've created that you can pinch would be to start off in the portal, where my client has just received an email from the advisor to say, log in, I've just sent you a brand new ATRQ. So I'm a pretend client at the moment. I can log in. These are the calls to action. So the portal isn't just about an ATRQ. You can also do the fact find, AML checks, ESG ATR, and even documents. We'll come into this in a minute. I can approve and sign documents as a client through here as well. And links as well. So again, if I'm an advisor, I might want to ensure that my blog posts are always live on the portal, or my LinkedIn profile, or a little link so they can book a meeting with me, or my Twitter X feed as well. So there's lots of things this portal can do, but equally the most important one for this integration is it allows my client to complete the ATRQ. And what this essentially looks like is a bit like this, where my client would just go through this themselves. There's 13, 14 questions. There's 13 risk-based questions and one investment term question. And the client is just going through these one by one and telling the system what their preference is for each one. Once finished, once they've told the system what the investment term is, they can continue. Now this is capacity for loss of knowledge and experience. Any single time the client says yes to one of these, they're forced to put some notes in there. Again, this is all aligned to the FCA guidelines. Once they've completed this, they can just simply finish and review. And then it plays back to them the questions and answers they've just given it. And once they click on submit at the very bottom, it then plays back to them the risk profile result. And obviously this is now sent across to the advisor. So that's now client job done. If we come back to the advisor side, I'm now in, that was Keith Baker, our client. He's completed that. I'm now in Keith Baker in Cash Calc, and I can now go to the ATRQ tab. At any time in the future, I can send them a brand new questionnaire, him or her. This is a joint client. But you can see here, Keith Baker's just completed the ATRQ. I also had an email link to tell me that that's happened. So now I've logged into Cash Calc and I can review the completed ATRQ. And this is what it looks like on the advisor side, very much similar to what the client was just looking at. But I can now play back the differences in the responses last year to see if there's any inconsistencies there. And then basically the system saying to me, look, this is what the computer thinks. What do you think? Are you happy to confirm that 3 medium is the right risk profile, or do you want to adjust it and change it for whatever reason? And you can obviously pop in your own notes at the very bottom. Once that's saved, marvelous, that's kind of the job done. But now in terms of where the integration comes in, this is where the ATRQ stops in Cash Calc. Because Cash Calc doesn't have any of the MPS or the fund single manager multi-asset data, it can't now suggest what the most appropriate solution is. Maybe the most appropriate solution that you use is the Tatton cautious solution, or the Vanguard LifeStrat 80, or maybe a blend, etc. But that's what analytics is built for. So I can now send all of this data directly into analytics to run that tethering of the investment solution, and then create a nice report that will then send back to the client. So if I click on actions, I can click on export to FE Analytics, give it a name and click on export, and then go into analytics, and in one fell swoop, I'm now in analytics with all of that data, all the ATRQ results, all the capacity for loss questions, any additional notes I've made, found its way from the portal to Cash Calc into analytics. And as I said, what analytics can now do is, because it knows what your centralized investment proposition looks like, whatever that looks like, it will now show you all of the solutions that you use on a regular basis. You can obviously add whatever you like to this, and it gives you, it signposts in the top right, look, the solutions that you use, you should be looking at a risk between 65 and 75, because your clients come out as a 3 on the risk profile. So I'm looking at the solutions I use, a very simple example because I only use Life Strategy, and I'm saying, okay, well, that's Life Strategy 60% is perfectly in line with the level of risk that client should be taking. And then before I start creating reports, I can start looking at some stats around this proposed proposition I'm looking at, just in case I change my mind. But I can look at the performance of that portfolio, look at the holdings, look at the ESG analysis, look at the performance, risk and ratios, and the breakdown, which is asset split, sector split, regional split. I can also do this against any of those other solutions as well. So if I wanted to compare Vanguard 60 versus Vanguard 80, or if I had a load of MPS solutions in there as well, I could compare those before I selected a solution, or even blend them as well. But the final report looks a bit like this. I dictate as a user what pages I want to bring across into that report. And once I'm done, I can just simply hit generate report at the very bottom. And as if by magic, I get a nice little report pop up, which brings all of that data into one report before we send that across to the client. So I've got my ATRQ initially that my client filled out into the portal that was integrated into CashCalc, that was integrated then into analytics. So all of that's played back to us. Then I've got the risk profile results that the client confirmed in CashCalc. Then I've got the capacity for loss, knowledge, and experience responses that again was relayed in the portal into CashCalc into analytics. And then underneath this is how it conforms to the FCA good practice recommendations for risk profiling. That's what it means to be a 3 medium. So I can give that back to the client for compliance purposes and say, look, just before you sign this off, this is what it means to be a risk profile 3 medium. These are the highs and lows you've experienced, and these are the possibility of losing set amounts. Then under that, probably the most important page, in my opinion, look, you've come out as a 3. Why have we picked life strategy 60%? Because it's risk profiled at a 3 out of 5 solution, which is bang on where you need to be. And then some further analysis in terms of the charges you're going to be paying, the performance, all of those tabs I was looking at earlier, just played back on each page. On the final PDF, and because I've asked for it, a fact sheet and a KID document before I get a signature page. I appreciate this is a very simple example. I'm just looking at one multi-asset fund, but whatever the solution is, whether it's a blend of MPS, whether it's a blend of multi-asset, whether it's just one single manager fund, you can plumb anything into this risk profile. Now, the one thing this isn't doing, admittedly, what about if there's seeding schemes? Okay, well, I'm playing back to the client there are 3 out of 5 and the proposed solutions are 3, but what about where they are at the moment? They've got a seeding scheme with Aviva and they've got a load of funds in there. I want to know where that sits on that same scale. Well, if I come back to this presentation on here, that's just a switch report. And had I have clicked on that, I would have got something a little like this instead. So again, the output is very much dictated by you. What do you want on the output? If you want to compare it against a seeding scheme, you just need to make switch report ticked instead, and you get this. You get the same kind of report as I had a second ago, but now it's showing me, look, this is your existing portfolio with Aviva. It's actually risk rated at a 2. We think you should be a 3, and this is a proposed solution we think is risk profiled at a 3 as well. And again, there's all of the comparisons between those solutions and the reasons why we're proposing you should move across from your existing solution to the proposed one, however subtle a tweak, that whatever that looks like. That's great. I've got my report. I need to join all these dots and bring this back to the client via the portal. So that's the final bit, which is this. So back into CashCalc as the advisor. I was on the ATRQ tab a second ago. I'm now on the Documents tab. I can just simply click on Send Document to the client. Again, I'm still within Keith Baker. I can call it something, give it a description. I can choose the file that I've just created in Analytics, which was my switch report. And I'm also going to suggest that this needs to be digitally accepted and signed off by the client. And if I click on Send, suddenly again, we're on the client side. I've just got that email come across to say, look, Mr. and Mrs. Klein, advisors just sent you a document for you to sign off. So again, I'm logged into the portal. Lo and behold, there is no call to action for an ATRQ anymore because I've done that. So that's disappeared. Still got a few other things I should really be looking at. But my ATRQ 2025, I can view that. And that's what we were just looking at a second ago in Analytics. And if you see there, I have to tick and say, I confirm that I have read and understood the document. And the moment I click and accept that, that's then recorded on the advisor side. So whenever you're in CashCalc as the advisor, you can go onto those documents and it records there and then the date, the time, the person, the IP address that signed off that document. And they have explicitly ticked that box to say, yes, we understand and accept this document. So if FCA and compliance ever come knocking, you've got all of that to hand that you can prove they logged into a secure encrypted portal that only they could access, and yes, they understood and accepted whatever document you sent them, whether it was an analytics document or anything else for that matter. So that's the first integration. That's the meaty one out the way. So that's how we've kind of integrated all of the ATRQ flow from, as I said, portal, CashCalc, analytics, all the way back again. The second one is we built this within this year in 2025. This is integrating advisor asset directly into the heart of analytics. So as I said in that the intro at the very start of this webinar, advisor asset bring to the table platform due diligence and cost and charge comparison. It sits very well in analytics. We've built that now inside of analytics, so anyone subscribing to analytics automatically gets access to that included within the subscription. So that was quite a heavy lifting job from our development team to embed and tether that in itself, which we'll look at in a few seconds in terms of how you actually port across to that application. But the second integration they've built is, okay, that's great, but in advisor asset, I'm expected to do charge comparisons. And a lot of the charge comparisons I'm running on portfolios that live in analytics. How do I get the portfolio from analytics into advisor asset so I don't have to rekey and build that portfolio? Well, That's what we've built. So the idea is in analytics, I've got a proposed portfolio, Keith Baker. I'm going to propose that the client consolidate some pensions and some ISAs and invest in this new portfolio I've built. And again, this could be anything. It could be an MPS, it could be a mixed bag multi-asset portfolio, whatever. But if I click on edit, I'll open up that portfolio. This is a mixed bag multi-asset. So I've got 3 multi-asset funds. And I've got a new tab here, just export to a FE advisor asset. So I can click on that. And I can say what the file's called. It's going to be stored on my desktop and click on save. And now I need to port myself into Advisor Asset to basically import that data so I can run some charge comparisons. So you'll see on the left-hand side, this was the first integration we've built, the ability for you to very quickly port from analytics into Advisor Asset for that purpose. Whether I'm doing charge comparison, consolidation work, or platform due dil, you click on any one of those and it takes you directly into the Advisor Asset application for you to then start running that charge comparison. The portfolio needs to be imported, so I can just simply click on the portfolio tab on the left-hand side. These are all the portfolios currently sitting in my account. I can just simply hit add new. I can click on continue for import from CSV, which is basically Excel. Import the file. There are the 3 funds it finds with the correct percentage weightings that it's taken from analytics. And I can just hit import. And once I've imported it, I need to now start running some charge comparisons. So again, this is Keith Baker again, my same client I was using on Cash Calc. He's got a few seeding schemes. I'm suggesting he move into that proposed model portfolio. So seeding schemes are at the bottom there. You've got 1 ISA and 2 pensions, the different values of which are listed as well. I'll just open up this M&G SIP so you can see what's in here. And creating a seeding scheme is pretty simple. What's it called? What's the value today? What are the projections that the seeding scheme has given you? If you have them, if you haven't, that's fine. You can just type in the charge and we'll work those out for you. There are different ways, obviously, of calculating ROI. But once you've completed the bog standard information on the seeding schemes, the system then needs to know, okay, where are you aggregating this to? What portfolios are you going to move these assets into? And this is the top tab here. Well, I've got 1 ISA. I want to move that into Keith Baker portfolio that I've just pulled across some analytics. And the same with the pensions. We're going to aggregate those 2 pensions and invest it in exactly the same portfolio. I want to drop my advisor fee in here as well. So a basis of advisor charge. There's my advisor fees already plumbed into the system. So that's bespoke to me. And now I can just simply hit next. And what that does is it now knows my advisor fees. It now knows my portfolio cost and charges. So it's going to run that analysis on every single platform. It knows the tiered charge of every single platform. So it's now going to work out for you which one's the cheapest. Now, I would stress, if you can just see this, there's a little exclusions tab on the left-hand side. You don't need to run this against every single platform. If your business only uses Aegon, Aviva, and Transact, then you can set up an exclusion that only excludes everything else and only runs it on those 3 platforms. So every single time you run this analysis, it's only ever going to pick out those 3 platforms and not have to do the whole of market each time. Just wanted to point that out, because obviously if you do whole of market, it looks a bit like this, and it will take, understandably, a few more seconds to load up. But in this case, I've looked across the whole market. That portfolio that I'm aggregating is the cheapest on Aegon. So we're going to click on Aegon, and it's just going to run a secondary set of calculations now to say, great, you've picked a portfolio, you've picked a platform proposition. Now we need to compare that against your seeding scheme. How much is your seeding scheme versus if you consolidate all of these assets and tax wrappers onto one platform? Your current legacy seeding schemes aggregate to 1.39. If you move that to this brand new platform we found, add my advisor fee and the solution cost from analytics, it's only 1.07 because of that tiered charge. And then it kind of relays back play by play each one of those assets as well. And then you'll get a final report that looks a bit like this, that again plays those headline figures to you at the very start to say, well, look, Mr. and Mrs. Client, this is why we want you to move across, because the critical yield is 0.32. So we're significantly cheaper based on these seeding schemes. And then all the charges that it's taken into account. So these are your investment portfolios that we're proposing. You move into this portfolio Keith Baker proposed with these 3 these 3 funds that again have been pulled across from analytics, and their OCFs and transactional costs are included. Then you've got the advisor remuneration as well, the advisor charging. Again, that's bespoke to me, so that's playing it back in here. And again, more importantly, this is the tiered charging that we're using for the Aegon Arc platform that you've just used. Now, there is another tab in Advisor Asset that allows you to put in special rates. So yes, if you do use the ARC platform, but they've given you a special rate because you're a super good client for them, then you can build those special terms into the system, and it will just simply use those instead. And it automatically emits the standard terms and it will replace them with whatever you're getting on that particular platform. and obviously work that into the ROI figures as well. And then it shows you the platforms are excluded for share class availability, and it shows you the again the playback of all of those platforms and how they've not only just met your criteria, but how much they're costing and why you picked Aegon. And again, I know I just mentioned this, but to stress again, you don't always have to show all of the platforms. If you only work with 2, 3, 4 platforms, then great. Configure your advisor asset account in that way, so only those 4 platforms will show, and then it will then show the exclusions and explain why you've excluded them. You've excluded them because in January you ran your due diligence, and your due diligence determined that you were only going to use those 3 going forward. So that's the advisor asset integration. Moving on, 1 and 2 are done. So 3, 4, and 5 next. So hope you found that useful. Again, just to mention those that have joined maybe a little later, missed the intro. There is a question dialog box on GoToWebinar. If you've got any questions throughout this session, if any of this doesn't make any sense, you want me to maybe explain this in a bit more detail, feel free to hit the question box and we can answer any questions at the very end. Right, number 3, integrate your analytics account and your FE advisor asset account with MPS data you need. So if you remember what I said at the very start, it isn't just about software integrations, it's about data integrations as well. And obviously being a data house, this is very important to us. So there is a lot of you will be aware that there is an MPS directory built into analytics. If you want to know where it is, it's here. So when you log into analytics, you've got the MPS directory you can click on, and as if by magic, you get this long list of different providers. There's about 83, 84 providers now. In fact, we're constantly adding some. Again, it never ceases to amaze me how many MPS providers there are out there. Just when you think you've got all of them, another one pops up, and we're suddenly adding another 1 or 2 every couple of months. So, but all of the kind of the core main players, all of the assets under management, 97, 98% of assets under management, I suspect, are within one of these logos. And the idea on analytics, and it has been like this for 10 years now, is if you click on any one of those logos, you can get access to their model portfolios. And what that means is within analytics, you can do this sort of stuff by integrating that data set. You can start creating charts on that MPS. And it isn't just about serving up to you a 5-year performance graph or a 3-year performance graph. It's important to note that the performance figures we're generating here are generated by us. You're not having to rely on the DFMs telling the truth, or having to worry about, are they using different time periods? One's doing up to weekend, and the other one's doing month-end data and quarter end. None of that nonsense. This is created by us, validated by us, and provided into analytics to you. And you'll notice these charts have these little dots on them, because our return series to create that chart understands that that portfolio is being changed. So we can show you all of the times that portfolio was changed historically as an MPS. But more importantly than that, you can interrogate that data even more. And so actually, when that MPS tanked in 2022, 2023, and kind of hit the bottom here, I can see the DFM made a little change near that bottom. Show me what would have happened had they not made that change. Would it have got worse? Would it have got better, etc.? You can do this on any kind of transactional portfolio in analytics, and it will show you then what would have happened had they not made that change. It would have followed that red path rather than the blue one. So again, you can interrogate this data to a very high level and run full due diligence on these MPS solutions you're using to ensure that the changes they're making to these solutions are actually having a positive impact on the performance. Equally, you've got reporting as well. So a lot of that MPS data within analytics can be thrown directly into a nice report that just gives the client a huge amount of detail in terms of, again, the performance versus benchmark versus the underlying holdings. The underlying holdings of my model consist of this. I've got ratings analysis. I've got scatter chart analysis. I've got asset allocation analysis, diversification of that portfolio, and again, all of the fact sheets of those funds as well. And lastly, you can more importantly run comparisons. So I can show, look, Mr. and Mrs. Client, you've got that Keith Baker pension of yours at the moment in Aviva or Standard Life, etc. We're suggesting maybe stay on the platform but change the portfolio. We want to use this MPS solution over here, and now I'm going to compare the charges, the performance, the holdings, the asset allocation, all of the reasons why we think you should be changing from one to the other. So there's a huge amount you can do in analytics with that MPS data already. As I said, there's 80 plus providers. We've got well over 3,000 models now, because we don't just integrate off the peg model portfolios. We also integrate the bespoke model. So if a DFM creates and builds a bespoke mandate for a specific firm, we can integrate that into our database as well and tether that into your analytics account. But there is a limitation of all of this, and anyone that's used the MPS directory doesn't need me to tell them that the problem it doesn't really do the initial bit in terms of any kind of filtering. At the moment, I come onto the directory knowing who I want to use. I come onto the directory knowing that I use Rathbones, Marlborough, and Ravenscroft. So I will go and enable myself for those models. But what about if I suddenly fall out with one of those and need another one? Or maybe I'm happy with those three, but they don't have a decent enough ethical mandate. I'm not saying that's the case. I have no idea what the mandates they have, but let's just say in my imaginary world, they don't have an ethical mandate. And I now want to find a really good proposition that provides me with a cheap, ethical, passive mandate, whatever that may look like. At the moment, the directory doesn't really lend itself to that, because theoretically, I'd have to enable myself with every single provider. And then I've got 1,500 up to almost 3,000 model portfolios plugged into my analytics account, just creating space when I won't really need most of those. So what we're doing, and this is a bit of a sneak peek, we've created something called the MPS universe to cater for just that. So you can run full due diligence on the MPS data before you decide to actually enable yourself via the directory. This is incredibly exciting for me personally. It's been something I've been working on for quite a while now. We should have this launched within the next month. And the idea is when you log into analytics, you don't need to be enabled for anyone. You can just simply go into your instruments tab, and instead of selecting unit trust and OEIC or pension or ETFs, you can select MPS universe, and up pops all of the MPS providers. You click on any one of those, it will show you what their MPS solutions are, and you can add them into your active list. Once they're in the active list, you can do this sort of stuff with them. So you can click on that little fact sheet icon and you get the fact sheet load up with the performance of that solution, the breakdown of that solution, the fund size, the AUM, the charges, all the stuff you expect on a fund fact sheet. You'll get exactly that for here as well. But also quite exciting, you also get their documents. So we've created all the infrastructure necessary for the MPS providers to send us their documents, so you can now access them through the system. At the moment, if I wanted the documents for Bruin, Tatton, and Thesis, I have to go to Bruin, Tatton, and Thesis for those documents. I shouldn't have to do that. That should be centralized into the system I'm using on a daily basis, which happens to be this one. So I should be able to access all of those in one place. I expect that when I look at funds, when I go onto TrustNet, when I go to analytics or any other application out there, I expect to be able to get the kids' documents, the fact sheets, the semi-annual reports, the prospectus. I can't do that in MPS world, which seems nuts because they produce the same sort of reporting. So this is something we're trying to provide. So you don't have to be enabled. You can simply go on and start extracting all their most recent literature, fund fact sheets, rebalance reports, and market commentary reports we've done on the first wave. So we're busy at the moment collecting that data off them. And even more exciting than that, in my personal humble opinion, as part of that universe, when you create a universe, we can create sectors of those universes, and by creating sectors we can also leverage the crown rating methodology as well. So in one fell swoop, when that universe gets launched, if you click on the sectors tab, you can look at our brand new MPS sectors. So if I want to know how good my Bruin balanced solution is against all the other balanced solutions in the market of MPS, or I want to see how good my Hawke's more cautious solution is against all the other cautious solutions, I'll now have a sector that I can compare them against that will be available on those fact sheets, but also that then drives the crown rating. And all of this obviously feeds into the filter. So I can go into the filter and say, look, before I go onto the directory and start enabling myself with stuff to do some deeper analysis and deeper dives, I want to run a filter. And go back to my initial example. I want to run a filter to show me all of the MPS that have an ethical mandate, that has a low charge, has a good crown rating, a good quartile, and maybe a high level of AUM. And it will find those 3 or 4 solutions, and then you can go onto the directory and ask for that information to be plumbed in, and then you can start running some further analysis on them. Now, admittedly, this won't allow you to create charts, tables, or reports on the right-hand side of analytics. This is just trying to fill that gap at the moment. You've got the directory to do all of that. Once the data is fed into analytics, you can do whatever you like. But that initial bit where it's like, okay, I need to know which solutions are out there that offer the solutions that I might need. That's the whole purpose of the MPS universe. So again, bit of a sneak peek. I know that's not technically launched yet, but it will be very, very soon. So something to look out for, latest bit of development. Advisor Asset also has an MPS directory that many of you possibly aren't aware of. So in MPS world, so it works a bit different to fund on platform availability. That is, if I've got the Vanguard LifeStrat Y share class or Z share class, that Z share class is going to be the same cost on every single platform. So I don't need to worry about the cost changing. That doesn't happen in MPS world. So when I'm trying to run a cost comparison against 20 platforms on my Bruin balanced portfolio, well, that Bruin balanced portfolio has a slightly different OCF on the Transact platform compared to the Aegon platform and the Aviva platform because of share class availability on those platforms. So even though it's a subtle difference, it's still a difference that will impact the overall charge comparison and the reduction in yield. So what we want to start doing, and what we have started to do, is you've got a tab in Advisor Asset called pre-configured DFM. You've also got pre-configured manage for those managed solutions like Royal London Governed. But you'll see on here under the portfolio tab, I can select pre-configured DFM, and instead of building this all myself, I can just simply come in here, and at the moment we've got 5 because 8 AM has just been added. We're just about to add Fidelity as well, but we can add quite a lot over a short period of time. So we're hoping this will scale up pretty quickly. But if I'm using the FE Investments model portfolios, I don't need to build those manually into Advisor Asset. I don't need to import them from analytics. And again, that wouldn't help anyway because the charge is going to be different on the different platforms. I can just simply hit FE Investments, tick on the models that I use, and they'll be hard coded into my Advisor Asset account. And I mean by hard coded, meaning that all of the changes are happening in the background. So every single time the charges change, every time the FE Investments team make a change to those model portfolios, every single time they make themselves available on a new platform, that's not something you have to worry about. In your portfolio tab, you just need to select the FE Investments model, run that against the charge comparison, and it does all that heavy lifting for you. So it's a really exciting part of Advisor Asset that was never really built out before acquisition of FE. But that's mainly because the people in charge of Advisor Asset didn't necessarily have the relationships with the DFMs. Obviously, we do. We already have relationships with all of them because of the directory. So this should be relatively simple for us to roll out. It's quite a simple build, so it shouldn't take much resource for us to get them all on here. So again, something else to look forward to, hopefully, making your life a lot easier. If you want to use MPS or blended MPS with a client, you can use, particularly when charge comparisons, you should be able to use Advisor Asset for that very job, rather than building it yourself, which you're having to do at the moment. So that's kind of, as I said, integrating more data into these ecosystems. As I keep saying, it's all well and good integrating their technology and integrating new features, but what about the underlying data that you need? We're a data house and a tech house, so we take care of both. Perfect. That's number 3 done, and a couple left. These are quite small, so again, just as a reminder, any questions, feel free to hit that question box and ask as many questions as you like. And we'll cover those off in the next 10 minutes or so. Link your FE Analytics Cash Calc account to your back office. So again, for years and years now, we've linked our applications to the kind of these CRMs and platforms in the outside world. And a lot of these integrations have been around for well over a decade. But it's amazing, again, how many people aren't aware that they're available and what you can actually do with them. So this little slide will hopefully explain that we've got a lot of integrations with all of these different providers. And it just simply means you can bring their data into our world, into CashCalc, into analytics, and sometimes the other way. We've also got FinExcel as well, which is essentially a Excel plugin. So this is something we plan to do a bit more promotion on. It's a feature that's used quite a lot by the institutional world, but we see a lot more application for this in advisor world. So again, we can provide more information on FinExcel, but it's essentially a much more elegant way of extracting our data. Analytics is an application that's been built for you to assess and analyze the data inside analytics. For those of you that want to extract lots of data and put it into Excel, FinExcel was developed for that very reason. But what are these integrations we've got at the moment? Well, I'll cover off a couple of them. This is Curo, Time for Advice. Now, this works with all of the other, although this is Curo, same with IO, same with Xplan, same with Wealthcraft. It's exactly the same idea. It would just have their name, not this. But the idea of integrating it into Cash Calc is if I'm in Cash Calc, I've already covered off the Documents tab and the ATRQ tab and the AML and the Ethical tab. I'm still in Keith Baker. I can click on the Integrations tab. I can link Keith to my existing Curo client, Xplan client, IO client. And once that tether has been set up between the two systems, I can click on any one of these tabs and push that data to my back office. So that looks a bit like this. Once I click on one of those tabs at the bottom, I've got 2 buttons. Do I want to push to my back office? Do I want to pull from my back office? If your process is set up in a way where you collect the data if you collect the data from the portal on CashCalc and bring the data into CashCalc, then you'd want to push that to Curo. You just simply hit the red button, if your process is set up whereby you collect the client data on the Curo side and bring that into Curo and want to pull into Cash Calc, then you just click on the blue button. It's as simple as that. And again, if it's Xplan IO, same difference. So that rich client data that's needed to derive a cash flow, how are you going to get that into our ecosystem? Do you want to use our portal, bring that into our ecosystem, push to your back office, or do you want to bring that into the CRM and pull that into Cash Calc so we can accommodate both of those? Analytics is obviously quite different because we're talking about portfolio data. So I'll show you with IntelliFlow, but again, it works exactly the same with the other back offices. I could just use a slightly different screenshot. It works in exactly the same way. So in IO, the way they've set it up is you just got plans. You click on the plans. This is the plans of Keith Baker. He's got an Aegon's old co-funds stocks and shares ISA, and I can just simply hit the analytics button. It basically knows the 10 funds he's got in that portfolio. It knows the ISIN codes and the percentage weightings. In fact, it knows the pounds and pence as well. It pulls that across. So when I'm in analytics, as if by magic, there's my Keith Baker stocks and shares portfolio that's pulled across from IO. And now I can do whatever I like with that. I can push that across to Cash Calc, which I'll be able to show you in a second. I'll push that across to Advisor Asset, or I can do anything with it on the right-hand side. So once that data lives in our ecosystem, you can start pushing and pulling that around the different corners of our ecosystem as well. And just finally, we've also got another nice little integration with the platforms. A lot of the platforms actually integrate directly with analytics. So a lot of them, like Transact, you can just go straight into Transact, and rather having to go to the CRM and then into analytics, you can go platform directly into analytics. But the way that the platforms interact and integrate with Cash Calc, we've got this little invest tab at the very top here. So again, I'm under Keith Baker. I click on the invest tab and I can sync him with Fundment. We do want to build this out and have more providers on here in time. But the idea is if I'm going to now suggest he invest on the Fundment platform, Fundment's going to need a few things to open his account. They're going to need his name, they're going to need his date of birth, they're going to need his address, they're going to need some policy information. All of that stuff already lives on Cash Calc. We already have that data within the system under that info tab, because you may have pulled it across from the CRM or you've pulled it across from the portal. So great, you can just click on invest and all of that information Fundment needs to set up the account will be pre-populated for you. So it's not going to save you hours and hours, but it will save you minutes and minutes, and times that by 150 clients, suddenly you get hours of time saving. So it's a really useful little integration. We built that a little while ago. We do want to kind of hopefully try and scale that up in time and have other providers on there. But if you're watching this and would like your provider to be part of that, feel free to reach out and we can try and prioritize that with them. Super. So that's the integrations on the CRM. That's 1, 2, 3, and 4 done. Fifth one, in my mind, the most exciting one. This is the most recent. We literally only just launched this about a week ago or within the last week. This has been something that a lot of clients have asked for. And this is actually one of the core reasons we wanted to acquire Cash Calc. We wanted this ability, if I'm in analytics, to send a portfolio into Cash Calc, and that drives the cash flow. At the moment, if I'm in Cash Calc or in any cash flow tool for that matter, I'm having to kind of guesstimate what the growth rate should be. Okay, well, my client's got a pension here, 5.5%, 4.5%, 3%. I don't know. I'm going to have to put a growth rate in there. And that's obviously the most critical part of the assumption on a cash flow. How much are your assets going to grow by? And it's such an important field. And we can help you with that because we've got all of the asset allocation data on that portfolio that you're trying to mirror and project. So what this integration does is simply take that asset allocation, feed that into Cash Calc, and give you a growth rate you should use by looking at the annualized growth rate of each one of those different asset classes, aggregating them together based on the percentage weighting that you've got in analytics, and then giving you a bespoke growth rate. You can also pull across the asset allocation raw as well for the Monte Carlo, which I'll show you here. But the idea is that whereas before I had this portfolio that I could now fling directly into Advisor Asset. So again, this could be a portfolio that I've just pulled across from a back office like IO, Xplan or Curo. I can now push that into Advisor Asset, but equally I can push that into Cash Calc. I can either select whether I just want to pull across a growth rate to use on my cash flow tool, or I want to pull across the asset allocation to drive the Monte Carlo. So I'll do both. I'm going to name that template. This is actually an FE model portfolio. So it's an FEI model portfolio 3, and I want to run that on 40 years worth of data. And if I click on create template, I've fast forwarded a couple of steps for time saving, but essentially under my savings pots, it will then essentially the asset that I've got that I then want to mimic that growth rate, I can adjust. So my cash flow now, when it says FEI core risk profile 3 portfolio medium term, bit of a mouthful, but that's growing at whatever it is, 5.5%, because that's the asset allocation that's just been pulled across some analytics, and that's the growth rate, the most realistic growth rate we think you should be using based on 40 years of annualized compound performance data bespoke to those different asset classes. And it happens within seconds. So really neat integration that should hopefully save you a lot of time, but also give you a bit of comfort when it comes to discussing this with compliance teams and FCA. Rather than just saying it's a bit of a guesstimate, gut instinct. This is actually using some scientific logic. There's lots of different ways of generating growth rates and capital market assumptions. And this is one I've decided to use that's kind of baked into the tool, and I can ensure I'm using consistent data flowing from analytics. Now, because we've also got the asset allocation, you can also just simply hit Monte Carlo. You can run a Monte Carlo on that pot, and you can see on the Monte Carlo, my target is to simply not run out of money. The clients come out as a risk profile 4, maybe on the risk profile from earlier. I can now select the solution in here that I've just pulled across some analytics. It pulls all of the asset allocation data in here. I can run that over as how many of the years I like, and I can now run 10,000 simulations over the top of that original cash flow that's using the baseline assumption, the capital market assumption that I've just discussed. And now it's giving me even more comfort because it's telling me with 10,000 simulations over the top, 77% of those simulations stayed above my target. So again, when I'm talking to my client, when I'm talking to my compliance teams, when I'm talking to the FCA, this should hopefully give me a lot of kind of weight when I'm trying to propose these solutions to a client. So that's our 5th integration I wanted to cover. That's the lot. Hopefully you found that useful. Before I just get on to the questions, just quickly come back to my PowerPoint. Here we go. Those of you that are watching today, we will be in touch. So if there's any part of this ecosystem that you're not using that you quite like the look of, we'll be in touch and offer you a free month trial and a free one-to-one as well. So feel free to sit down with the team and actually go through this with a live case. So we'll be in touch regardless. We'll also do a lot of webinars. I know we do one every Wednesday, but there's loads of webinars we try and put together to teach people about how to use our solutions. So there's a QR code in the middle there. Feel free to scan that and sign yourself up for some of the exciting webinars we've got coming forward over the coming weeks and months. And me and the team post a lot on LinkedIn. We post a lot of content. It's been a really great avenue for us to kind of teach our client bank about, again, how to use our software and how to leverage that software as best as possible, and also to keep you guys updated on some of the new feature releases as well. So feel free to connect with me on LinkedIn, that QR code on the far right there. I'll obviously accept your connection, and we can feel free to ask me questions through that as well. Let's leave that for a few more seconds. I know a colleague of mine has kindly been answering some of these questions as they've come through. So I'm just going to double check. I'll come back to this slide if someone hasn't scanned this. Bear with me. I'm just going to stop sharing for a second. Is this one? Cool. Right. Questions. There's a couple of questions I've got here. First one, thank you. What about integrating from platform? Hopefully I've already answered that, Andrew. Essentially you integrate from the platform into I know I concentrated very much on the CRMs, but you can also integrate the platform directly into analytics. There's not as many connections between platform and cash calc. Transact connects with cash calc, but ultimately, because all of those platforms naturally integrate with your back office, you can simply then send that data into cash calc via the back office, because your back office generally at the moment is what people are using for that client data. So hopefully I've explained that already. Thank you, Stephen. Can you put special terms for individual clients for a platform? Bear with me, I'm just going to expand that up. Yeah, good question, Andrew. Stephen, sorry. Yeah, you've asked, can you put special terms for individual clients for a platform, keeping the platform charge for everyone else as per platform? You can do that. Have I got Advisor Asset open? I think we should have time. I don't think there's another webinar after this. I might just quickly show you this. Bear with me. Actually, I'm just going to quickly take a note of the other questions as well. There's only 2 others. Yeah, Julie, you asked if there's an extra cost to access Advisor Asset within analytics. No, there shouldn't be. No, it's part of your subscription. Feel free to reach out to us. We'll sort that out for you. But no, that should be completely included within your subscription out of analytics. Thank you, James. Is there a sustainability questionnaire? Yes, very good question. I kind of glossed over that pretty quickly, but yes, there is. Yeah, on Cash Calc. I sent Keith the standard ATR queue. What I can also do is also send him the ESG ATR as well, and that asks some pertinent ESG questions and then provides like a 1 to 5, like a dark green to a light green scale. So when I'm now looking for a proposition, I can have that in my head. You know, should I go down that kind of ESG route, or if someone's already filled in their ESG ATR and it's come out as such a light shade of green, it's not really. And actually, I can go even lower than that. It would just simply say this client isn't interested in ESG preferences. So, yes, apologies, I wasn't included in this webinar, but yes, that's very much a feature within Cash Calc that I can deliver that as well. Just coming back to your point, Stephen. Just lastly, I don't think there's any other questions apart from that. I'm just going to press play again. Bear with me. Right, you should be able to see this now. So just on your point, there is a way of doing this. You do this in two ways, to be honest. If you've got a special term that only relates to one client, what you could do is just build the special terms on this one-off, run the analysis, and then just delete it. So that's one way of doing it. I can just simply click on special terms, add new from the provider drop down, say it's Aviva, click on next, tells you what their terms are, and I can just build in the new terms for Mr. Smith, save that, run the comparison, and then come back to my special terms and delete them. So I don't have to do that. There we go. So just simply delete it there. That's one way of doing it. The other way, you can actually build your own platform. So that would be another way of doing this. I could come in here and actually just build a platform and call that Mr. Smith Aviva rate or whatever it is. That's probably come up with something a bit more imaginative than that. But then you've got the ability then to add in your own charges in here. And all the different product charges, etc., and all the different tiered charges. And once you've done that, you can save that, and that would just be available under when you go into my portfolios, for example. You can then tether his portfolio and say that his portfolio is available on that special platform. So when you run the analysis, only that special platform will appear if you want it to. So yeah, I suppose the short answer to that is there's not exactly a lazy button that you can just hit that automatically does that, but there are ways in which the system can be configured to take into account special rates specific to a client rather than the entire client bank. Yeah, good question. Right, I think that was it. Any other questions, folks? Feel free to reach out to us directly. As I've already shown you this QR code as well. Feel free to reach out to me on LinkedIn. The team will be contacting all of you anyway, just to see if you want to trial. So feel free to reach out to them as well. As ever, hope you found that useful. Hope you found that insightful. As I said, any questions, reach out to us. And if you want to attend any more webinars, feel free to scan that middle code as well. I'll leave these up on the screen for the next few minutes, just whilst we wait for everyone to leave the virtual meeting. All that's left, have a lovely rest of the day. Thank you very much for your time. Take care.